I think if you look at Taiwan and Korea, the issue is over-concentration. We worry about it in the US, but when you compare it to these other markets, it looks relatively benign. We like emerging markets. We have some passive exposure. If we had to pick a region, we would go for China, and we've held China for a few years, and we hold it because of the normal valuation metrics that you should look at. The cheapness, the price to book ratio, the ability to have a lot of self-help.
Hello and welcome once more to the FT studio for the latest PWM Tea Break with our guest Paul O'Neill, Chief Investment Officer at wealth manager Bentley Reid. It's great to have you in the studio, Paul.
Thanks very much.
Are you a tea drinker or a coffee drinker?
I'll drink a lot of tea all day. This is peppermint tea.
Do the clients of the wealth managers come in and have a cup of tea in the offices with you, or do they prefer this more long-distance relationship through the portal, through the app, technology-based? I've been looking at some of these different models, comparing the industrialized wealth management to the more artisan approach. Which do you prefer?
Definitely the artisan approach. The reason I say that is because wealth management, rather than institutional fund management, is about long-term, really trusting relationships. So you don't want lots of staff turnover. You don't want lots of, let's say, data lakes that do not integrate with other systems, so you can't really use the data for the client's benefit. I like to think that apart from having the long-term relationships and really having the confidence of the clients, we can benefit from things like AI and data and technology by really giving clients far more communication, far speedier answers to their questions.
I'm glad you're talking about that integration, because we've had our special report on global family offices, and my colleague Elisa, she was talking to a number of players, and they were saying, look, these families have an advisor for impact investing, for philanthropy, for asset allocation, for succession planning, but there's not always somebody integrating all those different disciplines. Is that a challenge you come across?
It is, and I think it's absolutely correct, and it's absolutely how we hold ourselves out to the market to say, that is our role for you. We will help you with, the taxation, the philanthropy, all the other things, cross-border wealth management, intergenerational transfer. That's what we're here to do. We're here to help you solve a lot of your headaches, because that's what people want. And by the way, we'll do a good job on the investment management side as and when that's ready for you.
I was in Monaco recently. It's a tough job, but somebody's got to do it, for the Fund Forum, moderating some panels there. And there was a lot of talk about this Minsky moment with the markets. Have we reached the time where it feels the safest, but it's also the most dangerous with these Mag 7 stocks?
There is a risk that the tech story rolls over. If you look at the divergence of the Mag 7 versus some of the semiconductor stocks, one of those has got to give way. So whilst tech is okay and the markets are okay, we would lean into the defensive sectors a bit more. So for example, we don't have a tech theme, but we do have a US healthcare theme. We prefer defensives over cyclicals because the divergence there is at extremes, and we prefer, say, quality to some of the momentum stocks. We think the market is probably a little bit toppy, and we think there's quite a bit of maybe mean reversion to occur.
And you mentioned the semiconductor stocks, because we had a very interesting debate between two portfolio managers, one of them from AVI, one of them from your former employer Schroders. One was focusing on Japan, saying that's the best market in Asia, and another on Taiwan, the semiconductor-focused market, was saying this is the best market to invest in.
I think if you look at Taiwan and Korea, the issue is over-concentration. We worry about it in the US, but when you compare it to these other markets, it looks relatively benign. So again, we like emerging markets. We have some passive exposure. If we had to pick a region, we would go for China, and we've held China for a few years, and we hold it because of the normal valuation metrics that you should look at. The cheapness, the price to book ratio, the ability to have a lot of self-help, the transformation that's been going on the tech space with things like DeepSeek, which has surprised the market, but also the way China can stand up to Trump on the tariffs. So China's got a heck of a lot going from it, and we think it's transitioning from being untouchable a few years ago to maybe now investors thinking, well, there's a lot of fear of missing out.
In those decisions, you're using a lot of data to analyze the portfolios. And we've had some comparisons recently about using data in wealth management and the use of data on the sporting field. We've got the World Cup going on at the moment. Do you think, well, we need these big name, star quality stocks in there? Or do you prefer to have a package of lesser known names that fly a bit more under the radar?
Those trying to shoot the lights out, will leave that job to some of the other guys out there, because if you're trying to do that, you can get it horribly wrong. And that's something that risk we're not willing to tolerate. So whilst we would buy a star manager, and there are several I could name that we do hold, there's a very high bar for us to do that. We prefer a team approach. And actually, so if you look at the star managers, star players, then you take a step back and you look at the team, we would probably take even another step back and say, how is the game changing? And many people might say, well, football hasn't changed, but it has. You look at the pitches, you look at the ball, you look at VAR, you look at counting down throw-ins now, you look at overruling corners, it's all changed. So we look at it from a kind of 60,000 foot level and say, how do we think the wind is blowing and where do we want to be because of that?
And with the team of investment professionals which you oversee, do you also go for that elusive blend of the youth and experience?
Well, the guys that we have on the team, I guess it comes back to the long-term stability and relationships. The guys that we have been working at Bentley Reid since its inception. They're extremely good and passionate about what they do. So if it ain't broke, don't fix it.
You've always had that international focus. There's a Dubai office opening just now.
Yeah.
Do you see good prospects there?
Yeah, absolutely. We actually see it as a rerun of the initial Bentley Reid, which was founded 35 years ago over in Hong Kong. And the idea there was to service your clients by giving them the right advice, bringing together all those disparate roles that you've mentioned and saying, we will solve the problems for you. We see a very similar situation now occurring in Dubai, and we think that pattern's probably going to repeat.
Thank you, Paul O'Neill from Bentley Reid, for joining us today.
Thank you very much.
Sadly, that's where we have to blow the final whistle. Next week, we'll have an expert card player with us who will be comparing gambling with investment. So that's one to look forward to. And please send me your questions ahead of filming. I think you'll agree we've had a great chat today, and there are many more of these coming up in forthcoming episodes of the PWM Tea Break.